Hey everyone, welcome back to the channel, your number one source for income-oriented investing, and welcome to episode 50. You heard right, episode 50. I can't believe it. In my monthly series where I give you an overview of the income landscape, and we'll check out what the stock market as well has done in the last month. So, I mean, it's pretty crazy, guys. 50 episodes here. And just a reminder that this episode will cover the Canadian listed funds. The episode that will cover the US listed funds will come out shortly. So let's take a look at what the market has done in the last month. We'll go over some major indices just to see what they've done. And I don't really follow the news that much, to be honest, guys, when it comes to investing in finances. But if ever you're interested in that, you could always try out the Stock Pick app. So this is an application that I tried out myself. I thought it was pretty decent, pretty good just to give you the headlines. And what I really like about it is that it's a politically neutral app, and it's specifically designed for do-it-yourself retail investors. So make sure to try it out. You could use my referral link. You will get access to premium for free for 2 weeks. And by using my link, if ever you decide you like it and you want to get the annual subscription, you will get 25% off. So I think it's about $100 Canadian. It'll become $75 annually, which is about $6 a month. So give it a shot. You have nothing to lose. I thought it was pretty good. So let's move on and let's check out what, of course, the S&P 500 has done in the last month, which is a good general indicator of the overall U.S. stock market. Up 1.98% in the past month. It's pretty good. Did pretty good. The NASDAQ is on fire, up 2.8%. So the very tech-heavy NASDAQ 100 doing really, really well in the last 30 days in May. Canadian market, not so bad, down a little under 1%. The TSX 60 index here, which is top 60 companies in Canada, it's kind of like the S&P 500 of Canada. So that's what the overall market has done in the last month. So as usual, the US one's doing better than the Canadian one. So we're still waiting for, everyone's still on the fence for those rate cuts. That's basically what we're waiting for. So let's move on. Let's take a look at the Canadian landscape in terms of what I feel are the top of the line income-oriented funds. And I'd like to take a moment to thank the sponsor of this video, good friend of the channel, Harvest ETFs. And if you go on their website, by the way, they do have a guest speaker. They have a live webinar coming up, Jeremy Siegel. You could register. It's happening June 19th. So if you're interested in that, go ahead and register. 100% free. Pretty cool for a live webinar here. So when it comes to Harvest, there's really, well, now there's two funds that I'm always going to keep an eye on, because these are, by the way, the ones I consider, diversified. In this series, these are the funds I specifically focus on more, the diversified fund. So you have HDIF, which is the Harvest all-in-one, all equity. So this is all stocks. Chugging along here. Harvest is known for very, very, very consistent distribution. So no change in the distribution, stayed consistently forever. Of course, this is the leverage version. There's HRIF if you want the non-leverage version. My opinion, if you're going to hold something long-term, you might as well get the leverage version. But now there's also HBIE. This is the leverage balanced income all-in-one ETF. HBIG or HBIG for the non-leverage, but HBIE is the leverage one. So this is really for investors that if you want a 60-40 mix, if you also want to add some fixed income in your portfolio, you don't want all stocks, you could go with HBIE. Still have a really nice yield. They just declared their second distribution. Classic Harvest, 20 cents. It's again 20 cents. My estimate or my prediction is that it's going to have the same monthly distribution. This is what Harvest is known for, very, very consistent distribution. So we'll definitely add HBIE to the mix to keep a look at, to keep track on. Moving on now to Hamilton, you have HYLD and HDIV, which are their two diversified all-in-ones. Big news again this month, guys. Just released a video last Sunday to discuss this with Rob and Patrick. They increased their distributions again, so from 13.8 cents to 14.3 for HYLD, which means this is HYLD's highest monthly distribution yet. Remember when it started, it was at 13.75, then it went to 14, and then they had to cut it because their external ETFs, JEPI, QYLD, RYLD, all of those went down because volatility dropped, so they had to reduce it. This caused a lot of panic, a lot of nonsense as well, but check it out. Now they've finally re-raised it past their highest amount. I talked all about it with the guys at Hamilton, so make sure to check it out that video out in case you haven't seen it. If you own HYLD or HDIV, you got to check out that video. Same thing for HDIV. They increased their distribution again. This one just keeps on going up and up and up. It's absolutely incredible. So now it's at 17.1 cents a month. And like I discussed with Rob and Patrick, in case you don't feel like watching the video, they actually still are not giving out all the income. So HYLD makes all the income from the ETFs inside of it, which are now all internalized. It's all Hamilton ETFs. There is still over a 1% cushion that they're holding back just so they could be sure to have very, very consistent distributions that don't get reduced. So again, check out that video where I talk all about it with Rob and Patrick. Next one is going to be BMAX. And in case you're noticing, I'm doing all the leveraged ones first here. Then we'll go do the non-leveraged ones. So BMAX is Brompton's all-in-one style leverage covered call ETF or income ETF. Not all stocks, so it's about 70% stocks, 30% fixed income. Doing really, really well as well. They recently increased their distributions. Now it's at 10.417 cents a month, up from 10 cents a month. So just chugging along here, doing really well. What I find is really unique about this one is, yes, it's not all stocks. There's 30% in fixed income, which is not I'm not super fan of that. I prefer all stocks, but this one has 33% leverage, whereas all the other leverage funds have 25%. A little bit more leverage. I think that was a really cool idea that Brompton did. So I know many of you like BMAX because it's very, very, very nice, consistent, steady stock price, and that's because of that fixed income portion helps with that. Moving on to Global X Canada, no longer Horizons ETFs. And by the way, I'm doing a 3-part sponsored series where I go over all their new ETFs. Episode 1, which should be already out or going to be out soon before, if you're watching this video, is going to be on the growth ETFs. Second episode on all the new income ETFs, all the new covered call ETFs, which we'll talk about now. And third episode, very excited, I'm going to do finally a Q&A with a portfolio manager, somebody who manages the covered call ETFs. I have a million questions for them. So when it comes to USCL, which is the S&P 500, QQCL, NASDAQ 100, CNCL, TSX 60, there's no change in distributions. Remember, just change the L to a C to get the non-leveraged version if you want, but they're all chugging along very, very nicely. And there are 2 new ones to the mix, guys. They have an EACL, and again, change the L to a C for the non-leveraged version. For the monthly series, I'm only covering the leveraged version. And then they also have EMCL, which, like you've seen, like you probably guessed, it's the MSCI EAFE covered call ETF. So this is pretty much the most popular index. It's in things like XEQT, HEQT, that will give you access to all the developed countries, the developed economies outside of North America. So it's primarily the big 4 in Europe, guys, which is the UK, France, Germany, and Switzerland, and Japan, Australia. Those are the main ones in this ETF here. So it's with covered calls, with 25% leverage, and then you have the emerging markets, EMCL, which is things like China, Hong Kong, Brazil, South Korea, etc., etc., etc. So they literally have the 5 major indexes, right, all in those popular VEQT, XEQT, ZEQT, HEQT ETFs, right, to give you the whole world. They actually have them all now in a covered call leveraged form, non-leveraged form. So S&P 500, NASDAQ 100, TSX 60, which is Canada. Now you even have this one, which is developed outside North America, and you have emerging markets. And if you want to get them, you don't want to pick and choose them separately, there's, of course, EQCL, which is a leveraged version of EQCC, which has all 5 of them. So I have to give props to Global X, coming out with all these great options. So EQCL literally has now these 5 indexes all in one. So EQCL is basically a leveraged income version of HEQT, XEQT, VEQT. So if you're a growth investor, you could get HEQL. And if you're an income investor, you could get EQCL to capture the best stocks all around the world in a growth format or an income format. I think that is absolutely genius what Global X Canada did. So, and by the way, EQCL did raise their distribution recently from 19.5 cents a month to 21 cents a month. And that's because they didn't have the emerging market covered call one and the EAFE covered call one. So they had the growth ones in there. So now it's all 100% income. So EQCL, I know I did a video on it in the past saying why I'm not going to invest in it and And I said, you know, it's not fully an income ETF. Well, now it is. So EQCL, in my opinion, got a lot more interesting. Moving on to the all-in-one diversified non-leveraged one, there's ZWQT from BMO. This is the best of the best when it comes to BMO's covered call ETFs. Just past 10 million in net assets. I'm very surprised it's not growing faster than that, but I think people are, when it comes to BMO, they like to get their ZWB and ZWU, they like to get them separately. But they have an all-in-one in case you have a few BMO ones, you want to stick with the more conservative BMO strategy ones. You could get ZWQT, which is the all-in-one. You're going to get lower yield, of course. It's probably 6 or 7% yield. The distribution has not changed at 8.5 cents. Moving on to Evolve now, which has a TSX 60 and S&P 500 one. So SPX. And by the way, SPX, if you just Google SPX, that is literally the S&P 500. So ESPX is the S&P 500, no leverage, covered calls on only 33% of the portfolio. It's doing really, really well, about 7-8% yield here. What I really like about these, and ETSX is the same thing, but on the TSX 60. Very nice yield as well. No leverage, covered calls only on up to a third. What I really like about these one, guys, is they have really nice low management fees at 45 basis points, which is 20 basis points less than your typical covered call ETF at 65 basis points. So these two are great as well. So that's it for the more diversified all-in-one type covered call or income-oriented ETFs on the Canadian market. Let's move on now. Of course, you have BTCY and ETHY, Bitcoin and Ethereum. So the Ethereum ETFs were all approved. So Ether, you know, they didn't increase their distributions. It's 3 months in a row. It's at 3.8 cents. I think Bitcoin has a bit more of a chance to increase, in my opinion. It's at 5.25 cents 3 months in a row. So yeah, Bitcoin's doing really well. It's still almost hovering near the record high. And then you also have Ethereum if you're interested in that. So no major news for these ones. Honestly, distributions have remained the same in the last 3 months. Moving on to closed-end funds and split funds, guys. Of course, you have the king here, Canoe EIT. No real news, still 10 cents a month, trading at a discount, right? You see that here, the net asset value, how much it's worth is $14.18. You could pick some up at $13.81. So this is awesome. EIT it's performing really, really, really well. Over 10% return on average in the last 10 years, which is incredible, even much higher in the last 3 or 5 years. So these guys continue to be really, really good stock pickers. You see the top 25 stocks here, which if you go and check every month, there's always a little bit of changes with the order, but the top 25 that you're seeing here makes up 3/4 of the fund. So there is a couple more stocks in there. So EIT, no real big news. It's actually reached its 10-year high. I'm even thinking of maybe doing a video on this. Let me know what you guys think. Do you want another Canoe EIT video? I see a lot of chatter in the Facebook group and the Discord about people that have sold or are thinking of selling their Canoe EIT income fund because it's so high. There's a big profit to move into something that has higher yield. Let me know if you're interested in that video where I could discuss that in detail and give you my opinion on it. Let me know in the comment section below. Moving on to the split share funds, which again, I have to say the one that stands out to me the most is GDV. This is my personal favorite split share fund. GDV, guys, is trading still at a small discount. It's absolutely incredible. It's worth $10.03 a share as of this date, May 31st. You could pick some up at $9.89. So GDV, great time to pick some up, guys. If you really like dividend stocks, GDV is a really nice split fund for you to have because it's only the best, dividend growth stocks all over the world. So it's a great all-in-one type of fund as well. DGS, it's no longer trading at a discount, but you see it's not that far. 576, it's worth 576. You could pick some up for 617. The discount typically goes away when the split fund starts paying again, right? If it hasn't paid for a while. And you have LBS and SBC still trading at small premiums, I believe, not too far. And then you still have LCS and PWI, especially trading still at significant discounts. So it could be a great time to pick those up if you really like that particular sector, right? LCS, life insurance companies only. PWI, which I recently did a video and talked to Laura about that, the lead portfolio manager at Brompton. Make sure to check out that video if you're interested and if you like power and infrastructure stocks, which is a little bit more, more of a defensive sector. And I'm happy to announce that I'm also have a Q&A lined up with Lord to talk about GDV in detail as well. So if you're interested or own GDV, stay tuned for that video. Moving on to the middle field splits now, guys. You have, look at this. You have, ENS, which is Enbridge, used to be, last I checked, it was at a discount. Now it's at a little premium, right? It's worth $11.56. You pay $11.75 for it. So still a good pickup if you like Enbridge, because the premium is pretty small on this one. RS, which is all real estate, which for sure is undervalued now, but the premium is fairly big. It's at about 25%, right? It's worth $9.57. You got to pay about $12 for it. So it's not super attractive in terms of premium to NAV, but it is attractive in terms of sector that's really getting killed. So in case you want to invest in real estate, but you're hesitant to invest in RS because of the big premium, you could do it anyway. They also have, don't forget, MREL, which is the ETF, which you don't have to worry about the premium or discount, because ETFs are open-ended funds, right? So the NAV is usually very, very close to the stock price. But they did convert a closed-end fund recently to a new split fund. So they have a new split fund, guys. The infrastructure dividend split funds reminds me a lot of PWI, same type of stocks, a lot of utilities and infrastructure stocks. But look at this massive discount. So I actually remember seeing this with RS when it first launched, trade at a big discount. Obviously not anymore. So this could be actually a phenomenal opportunity if you understand split funds and the premium discount dynamic to pick up some IS, because it's worth $14.71 a share, but you could pick some up for much less than that. This is like a 12 or 15% discount. Let's actually calculate it together, guys. So you just take the stock price divided by the net asset value minus 1 times 100. So IS is currently trading at a 14.48% discount. You're literally getting almost 15% off the price, which is absolutely incredible. So I definitely want to point that out to you. Unfortunately, I'm filming this, by the way, on June the 3rd, and I can't believe it. Quadravest still has not updated their net asset value, so I can't really do much discussion about it. Let me just refresh it. My feeling is that, I'm filming this on Monday. The market's closed. My feeling that it's going to be updated like any minute now. But unfortunately, they're not updated at the time of filming. So I can't tell you, how DFN, FTN, and BK, what the premium discount dynamic is. But I would definitely keep my eye on FTN the most, because it was trading at a discount last time they updated. So keep your eye on it, right? $18.57. Just take $10 off of that, and that will give you the approximate net asset value of the Class A shares. And then you compare it with the stock price, and I have a feeling FTN is probably going to be at a discount again. So it could be some a good opportunity to buy some FTN if you want to invest in the financials, guys. So in terms of what sector now is undervalued, I still feel maybe the Canadian financials are undervalued. So to get a general sense of Canadian financials, you could look at the XFN ETF from iShares, which is just all the top Canadian financials companies. So if you look in the last 5 years, we're definitely, this is right before, excuse me, the COVID crash, $41, $42. Then at the height in 2022, $54. Now it's at $50 approximately. So I think it still has a little bit of room to grow. RBC has done really, really well. TD hasn't done well. So maybe there's a little bit of room to grow for the Canadian financials. If you look at just the banks, if we look, just look at ZEB, which is just the 6 banks. It hasn't reached the highest point of $42 yet. It's at 36. So I think there's maybe still some room to grow for the Canadian financials. And when it comes to the Canadian financials, there's literally $1 billion income-oriented, growth-oriented ETFs that you could invest in, leverage and non-leverage. The one I own personally, it's Bank from Evolve. That has banks and insurance companies, which I like. If you just want the banks, the 6 banks, Global X has one, BKCL. But I think the major story, and especially today, Monday, June 3rd, ENCL, or the energy stocks, have taken a giant beating today. So I think ENCL, which is just a leveraged version of ENCC, went down 3.43% in one day, which is pretty big, which means that the yield on ENCL is currently over 17%, right? Because the annual distribution rate currently is 348. If we divide that by the stock price of, let's say it's $20, it's 19.98, but let's just say 20. You're looking at a yield of 17.4% on ENCL. Absolutely crazy yield. Could be a good time to start picking up some energy. Maybe it'll continue to go down, but I have a feeling maybe for June, in 2 weeks when I get my dividends, maybe I'll invest more in ENCL. And another thing I want to point out, and if we look at ENCC, you could see this. They added a new stock, Meg Energy Corp, to this fund. So it's no longer 10 energy companies, it's 11 energy companies, 4 pipelines, Pembina, TRP, which you don't see here, Keyera and Enbridge, and all the rest are oil and gas producers, which you'll recognize all of them, right? But now there's Meg Energy Corp, which has skyrocketed, and this is why it's been added to this ETF. Remember, ENCC, ENCL follows an index, the Selective Equal Weight Canada Oil and Gas Index. You can actually Google that index, guys. Click on the index composition, and you'll see that now there's 11 stocks. They did add Meg Energy, which I kind of like. I don't really follow the stocks individually, but I would like that there's more stocks in there. And these are just the top 10 biggest ones. What I would really love, my dream for ENCCs and ENCL is make it North American, top North American oil and gas companies, not just Canada. I would love for Chevron and ExxonMobil and Diamondback and all those great oil and gas companies in the U.S. to be added in this, but unfortunately, it's just the Canadian ones. But still, I'm very heavily invested in this one. I got about, I think, $50,000 myself in ENCL, and I'll probably be adding more if the energy prices start going down, and which means that this ETF will go down. So that is pretty much it. What I feel is undervalued. Oh yeah, of course, real estate, guys. I mentioned it already. So you know that my two for real estate is RS. I keep investing a little bit more and more and more in it. I personally do have a plan to sell it, but that has everything to do with my situation, my tax situation, my portfolio. So just remember, keep that completely separate. It's not because I don't like the fund. It's because it's not tax efficient for me as a non-resident. But fortunately, it is trading at a big premium. But you could always pick up MREL again, and stay tuned because Hamilton is also launching a new real estate covered call ETF called RMAX, and it's going to be added to their suite of yield maximizer ETFs, and it's going to be top blue chip REITs in North America, I believe. So we can't, great timing for that one. Hopefully it comes out in the next couple of weeks, and do expect a video on that, guys. So that's it for this month, guys. Stay tuned for the US episode. So if you're American, obviously you're going to watch that one. You're not going to be really interested in this one. But if you're Canadian and you invest in US listed funds like I do in my retirement account, definitely stay tuned for that episode. So guys, celebrating 50 episodes, pretty crazy. Let me know what you think of how, I think it's pretty crazy that we're at 50 episodes here. Let me know what you think. Remember going back all the way at the beginning. Now I'm reminiscing where it was a different format, and I had to change the format, guys. I can't just pick 3. I got to go over all of them because there's so many new funds. When I first started this this series, there wasn't as many as there are now. I mean, and there just keeps more and more and more. But I think now, we pretty much have everything we need almost. Obviously, that real estate covered call ETF would be nice, but Global X did a really good job. We literally have the 5 indexes with covered calls. Leverage version, non-leverage version, you have the all-in-one now with EQCC and EQCL. Stay tuned for those episodes, by the way. But I think we pretty much have everything an income investor's dream needs here in Canada, which is great. So see you next time, guys. Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member, where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want. All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the Ultimate DIY Investing Package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and U.S. stock markets. And the good news is you'll only ever have to buy it once because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and PASSIV referral links below. So Questrade is the broker that I personally use, and PASSIV is the broker companion tool or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades. And PASSIV, I have half off for the elite membership. If you're interested in the elite membership, and even if you want to start out with the free membership and upgrade to the elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the elite membership of PASSIV is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram where you could follow us or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.